Morning ledges. So today we're going to have a look at the Bund and how I plan to trade it. Of course it is non-farm payrolls today, so at 1:30 UK time you are going to expect volatility to pick up in a big way. If we start out by looking at the daily chart of the Bund, you'll see that yesterday we did actually get inside day failure. For those that know my daily biases, once it's completed like this, I'm no longer using it as a bullish bias. And what I mean by completed is it broke the low of the inside day and then the high in the same session, which incidentally is very low probability, but it happened. So there is no more of a bullish bias on that market now. However, it has left a fairly substantial tail at support, so we'll bear in mind that there was considerable demand down at that area. Let's move on to the 60-minute chart, and it's on the 60-minute chart that some of the bigger levels start to really shape up. I have got a lot of levels drawn on here, but you can see that we've got a big area of prior highs just beneath this big demand level down here. That would certainly be very, very interesting to me as a point to try and pick it up on the long side should we get down there. On the upside, this is the first obviously decent resistance that the market's facing and that the market participants need to contend with, and then above there you'll see these three lows when price sliced right down through this area. So those will be my absolute focal levels on the day. Now if we come down finally to the 5-minute time frame, start looking at the kind of trades that I'll actually be taking, and we'll start right at the bottom and work up. Down here we've got some old singles that the market left at 62.38. If we are to trade down there today, I would come in and buy 37s, which is these highs, and I would put a stop at 30 just underneath this thrust candle that broke and closed above them. That would be a blind touch trade. I would literally just sit on the bid there at 37s. Now just above that I've got 62.57s. I have this as a daily level. It stands out very clear on the daily chart. It is also some naked singles on the market profile weekly chart. So I would come in and I would sit on the bid at 62.57s. I'd put a stop at 62.52s underneath this thrust candle here. Now it's not hard to talk about entries and stops most of the time, but it is quite hard to talk about targets because I play from one level to the next. So when the market's mapped out like this, it's easier to see where the next level is. But price action obviously develops throughout the day, and the market may create new levels intraday, which means that it's hard to tell ahead of time where the target's going to be. And so I can tell you that the market just dropped in a straight line down into 58s, then 81s is going to be my target area. But let's say the market comes down here and does something like this, it drops, finds a bit of support, say here, then falls lower. Well, then this is going to become my new target area. And in situations like that, I've got to think to myself, is the risk reward even there on the trade? Because I've got quite tight stops, it often will be, but you still have to factor that into your decision making process. Now you see the market's opened here, it's starting to push a little bit lower. We have got a prior day's volume value area high at 39s, and ordinarily I'd quite like to come in and be a buyer there. The problem is you've got the FTA at 44s, and if I got long at 39s I'd want to stop at 31s, which is an 8-tick stop, and then you're looking at that FTA which is really only 5 ticks away, so the risk reward just doesn't really merit it, unfortunately. Now moving above market, I don't sell resistance, so I wouldn't want to come in and sell anywhere up here between 75s, 76s. Maybe a possibility though that I'll actually get long there if we break and retest that area. I don't know exactly where I'd get long at the moment, because usually I buy the last high pre-break, which at the moment would be here. But I don't know if it will stay like that, due to developing price action. But essentially I'm quite bullish above the 77s, but not for long, because you're running into problems in terms of price support just above at 89s. I actually fancy giving 89s a go on the short side, and I will step in as a seller at 89s, and I will put a stop at 93s. Okay, really tight stop, and look for a run back to the 76s area here. Beyond that, we're looking at the highest set of singles on the week coming in at 07s, and the prior week's volume value area low, and that's a big area for me. I'm going to sell 12s, just a tick beneath the prior week's volume value area low, and I'm going to run a stop on that at 17s. Again, using the thrust candle principle. The only other thing I'll likely do is come in and try and sell the hourly level if we get up this high. I know that I want my stop beyond the thrust candle, which would be at 64.43s for the stop. So I'm kind of working backwards here, and I want to sell as close to that stop as possible. So I would sell 38s, this last little low on the chart here. If we have a look at ATR boundaries, obviously they're shifting throughout the day. You can see though that 38s is actually upside ATR as it stands right now. Downside ATR coming in at the huge demand level at 80s, but I don't buy areas that have been hit multiple times, so I would not be a buyer down at 80. Remember, I'm looking for a little bit lower at 58s. So that's how I'm seeing the Bund. Those levels and trades would stand throughout the day. Just bear in mind that I don't trade right into the figure. I don't mind trading after the figure, but for about 15 minutes before, I cancel all orders, and I don't put them in for about 5 minutes after. I just like the liquidity just to start to pick up again, because it gets very thin over the figure. So for around that 20-minute window, no orders going in, no matter where the market's trading. But otherwise, all systems go. Good luck for today, ledges, and I will see you back here tomorrow.